Cool. Are we good to go? I think we have 6 people.
Yep.
All right, guys. Hello. Let me do this very, very quick. And thanks, Boon, for giving this chance. Basically, what I wanted to do is I wanted to share a bit of my research on a company called Zscalar. I personally am not invested in this, but I have been monitoring a lot of the cybersecurity stocks. And we know that cybersecurity is a very important tailwind moving forward. So I wanted to find a company where I could think about investing in. So the reason why I picked Zscalar is because firstly, it has been performing very, very well in the past with all the revenue growth they've been having. So I'll just, this is my tweet because after I do a lot of my research, I try to summarize it in a tweet so that, at a later point, if I want to always refer back to it, I can come back. So this is like my journal. So let me just go through this structure. The way I've structured this tweet is more around it's like a simple Q&A, right? So I ask myself the question and I give myself the answer to get to know the company a lot better. And I have a set of questions which I want to know about the company before deciding whether I want to invest or not. So I look at the good, the bad, the ugly, and during the process, I build my belief, and that's what I want to share with you, right? I'm new, so I'm open to feedback. This is absolutely not perfect. I'm just a geek trying to do research at my own capacity. So let me know if you have any questions or if you find anything I can improve on, yeah? Cool. That was a quick one. Let me start off. Yeah. So basically, the question I have for the ones who are listening, right, is Zscalar worth the hype? And if you've heard about Zscalar as a company, right? So firstly, if you believe that cyber attacks are the number one threat to any business, right, this thread is important, right? So firstly, what does Zscalar do? Zscalar provides cybersecurity. And if for those who might want to understand cybersecurity better or might want to explain it to a 5-year-old, the simple example I can give is that, let's say if your information is stored in physical files, a security guard and a lock and key will be the one which will provide security, right? But if your information is stored in data centers, like usually for big companies, all the data is stored in data centers, then the security is provided by firewalls and VPNs. Okay. But nowadays, everything is moving to the cloud. Your AWS, your Google Cloud, your Microsoft Cloud, even our own files are stored onto the cloud. So how does cloud security come into existence? All the legacy cybersecurity firms actually focus a lot more on the on-premise data centers. Zscalar is the one which figured out and had the vision and the foresight to prepare their product called Zero Trust Security to provide cybersecurity in the cloud. Okay. Now, of course, a lot of the other companies have started catching up, but Zscalar does continue to maintain its prowess and its good sales lead in this cybersecurity area for the cloud. Okay. So what's the leadership like? So for me, it's very, very important that the company is founder-led and is led by a very, very strong leader. So what I do is I go to YouTube and I look at the leadership interviews, try to get the sense of the motivation behind the person. Where did they come from? Is it a rags to riches story? Does that person have good stake in the company? So I check how much percentage of the stocks they hold, etc., etc. And Jay Chaudhary is the founder and CEO. He has a 97% approval rating on Glassdoor. So if you go to glassdoor.com, there's a CEO approval rating where public people can just go and vote about the company and how their experience was. And he's a very humble person, and he's actually built this cybersecurity, cloud security infrastructure from the ground up. Nothing like this existed. He's not an engineer, he's not a tech person, but he had the vision and he got the team together to actually get this done. Now, let's look at certain good things about Zscalar. Then I'll talk about some bad ones and some may ones, just to evaluate. Like, we need to look at all angles, right? So what's good about Zscalar? Firstly, the revenue growth. In 21, they've grown tremendously well, around 60%. And in 2022, the estimated growth is at 55% year on year. So they've given guidance that in the next fiscal year, they're going to grow at 55%. If you go to any stock screener, you will struggle to find companies which can grow at 55% per year. If you believe that Zscalar is overvalued on all the traditional multiples, the reality is that the market is willing to pay premium multiples for higher growth. So the price to earnings and price to sales, or whatever, EV to EBITDA, whatever multiple you use, you'll always find Zscalar very expensive. But the premium is because of what they're going to grow. Just to put things in context, Apple is only going to grow 8% next year. based on the size they've already achieved. Google and Microsoft is 15 to 20, 22%. Zscalar is growing at 55. Tesla is growing at around 45 to 50%. Datadog is the only other company who's growing at more than 50%, right? So this is very well appreciated by Wall Street because they are addicted to growth. And wherever there is growth, they will flock. So what's good, right? But more importantly, I want to see, are they having good customers or not? So I looked at their 10K report and I actually tried to find what are the number of customers and have they grown them or not. So now they have greater than 5,600 customers. And more importantly, they have more than 500 of the Forbes Global 2000 customers. That is a big achievement because if you have 500 companies in the Global 2000 Forbes companies, that means that people are believing in your product and actually going for it. Their retention rate is 128%. What that means is that from the existing customers, they are able to generate 28% more revenue. So they've already gotten them, and then there's more recurring revenue, and they're able to generate 28% more revenue from the existing customers. Then the number of customers which are giving greater than $1 million in annual recurring revenue is up by 250 in the second quarter versus 220 in the previous quarter. So in one quarter, they've added 30 more customers who are now providing more than 1 million revenue. So you can imagine the momentum they have and how they're growing. Then corporate cybersecurity budgets are expected to increase. Every corporate organization is now going to allocate a lot more money to cybersecurity because the hacks are getting too obvious and too rapid. They are also disrupting cybersecurity firms, legal cybersecurity firms like Palo Alto and everyone, which actually are very, very well reputed in the cybersecurity market. But they've come up with a cloud-based product and they have very efficient sales teams and very lean corporate culture due to which they're able to blitz. So what else is good, right? So once a customer for cybersecurity is mostly always a customer because a company is not going to change their cybersecurity infrastructure for at least 3 to 5 years unless the product is super flawed, right? So that's good about this business as a whole, right? And this doesn't apply to Zscalar only, but every other cybersecurity business. They also have high gross margins, 77%. It's a very high gross margin, but it's pretty common for software companies. Now, let's look at the bad. So we need to look at from all angles. Their gap losses are widening. They are not focusing on profitability, and in this market, they might get punished because their operating margin is minus 33% in 2022 versus minus 31% in 21. And their net margin is minus 39% in 22 versus minus 27% in 21. So it's widening, right? So they have no focus. They don't care about gap profitability. And they have also not given any guidance on profitability. Like they have not said that we are going to commit on profitability. In fact, in their earnings calls and in their financial statements, they have actually mentioned that management will prioritize growth because the opportunity they have ahead is so large that they cannot right now focus on being profitable, but they need to just capture the market at the speed at which they can, right? So their goal will be to capture the market, but just bringing you back to this, right? 128% retention rate means if they start to get a big pie of the customers, they will have a lot of recurring revenue because this is a license-based model. Once I am a cybersecurity customer, I'm going to pay you in fees, recurring fees by users or by the software license. So it's a good strategy to just acquire the market and then you continue to get recurring revenue for a very, very long time. And also their cash is very low. If you see the total cash minus the debt, right? They only have 500 million. Now, if some other competition starts to reduce their margins and starts to give better deals to the companies, they really don't have the marketing budget or the budget in general to be able to compete with bigger players, right? Now, some so-so stuff, right? They have inconsistent free cash flows. They are cash flow positive, which is a good sign. So cash flow positive means that they have enough money to fund their operations. It's like cash in the bank, very loosely put, right? And they have cash flow positive, but it's inconsistent. They also have high stock-based compensation. Stock-based compensation is generally paid by the market. The company, it's not an expense to the company, but it causes shares dilution because if the more shares which get diluted, the less you have price per share. So it's actually bad for other shareholders. So we actually don't know. The other thing is that in the cybersecurity world, for people like us, there's no way to know whether this product is better than that product. Every company can make any claims, and until there is a hack, you would never know that one product is better than the other or not. And the question is then, can bigger players undercut them by dropping their margins? Okay, so let's talk about the competition. Microsoft plans to hire 250,000 people in cybersecurity by 2025. Okay, 250,000. This was in their latest earning calls where Satya Nadella said that this is their goal. If Microsoft starts to, and Microsoft already has cybersecurity products, by the way, they just do not sell it. Now, just imagine if Microsoft starts to bundle Microsoft Office, Teams, and everything, and then they say, okay, we also provide you security. It's actually a no-brainer for most companies, right? That they would actually go for Microsoft. So there is a chance that this big giant can actually eat the market share. But again, this is yet to be seen. So far, Zscalar has been producing results at an immaculate speed. Now, the other players like Checkpoint, Palo Alto, FireEye, Fortinet, Cisco also have comparable products. Now, the product advantage in cybersecurity is not very obvious. So the sales team which execute the best will matter, right? So it's all up to execution. And if you look at Zscalar's track record, they have executed very, very well so far. So you need to give credit for that, right? Now, with all the good, bad, and everything, like let's talk about the valuation. I have three cases. I have a bull case, I have an ultra bull case, and I have a bear case. Now, as I mentioned, Zscalar is not profitable. So sometimes it's very difficult to decide which valuation method to use. So ideally, if for a stable company or for a company with predictable cash flows, I would do a discounted cash flow model. But here, I can't do that because I'll have to make too many assumptions, and I'm just going to pretend that I've created a valuation model to satisfy myself, and it's going to be a waste because it's going to have so many assumptions. So I use a price, enterprise value to revenue multiple. So generally, when a company is not profitable, EV to revenue multiple is used. If the company starts to get better at profitability, then it's EV to EBITDA multiple, then it's EV to free cash flow multiple, and or discounted cash flow valuation. So market has a little bit of a structure in how they choose the valuation approaches. I don't like to take average of all the ratios like P ratio, this and that. I pick a multiple which is suitable for the company's stage. If they are an early stage, I will pick a revenue multiple. And how do I decide whether this company gets 10x revenue, right? So I will look at comparisons. So Palo Alto, which is the competitor, they are growing at 25% today and they are getting 20x. So I am saying that in 2027, I'm also assuming that Zscalar's growth will go down to 20% in 2027. So I'm giving a EV to revenue multiple of 10 in 2027. So I've taken the future and I'm giving a multiple based on the future, and I discount it back to today. And I get a fair price of 122. That this is the price I can pay today if I believe that they will grow at 30 to 20% from 2023 to 2027, right? 122. Right now, the price is around 200. Yeah. So let's look at the ultra bull case. I believe the market is valuing Zscalar based on this because cybersecurity is just such an obvious play. People are assuming that this 55% growth momentum which they have in the next year, they will continue with this momentum moving forward. And I feel it's possible, right? Like if they continue to do 40% and 30%, which is still lower than 2022, if they continue to do that, and if I give them a little bit of a higher multiple, because if you're growing at such a high rate, you deserve a higher multiple, then the fair price becomes 266 and is currently trading at around 200. So if you go to tip ranks, a lot of the analysts will actually give a much higher price target. And this is some of the methods they use. So I use Thinkorswim, TD Ameritrade. So if you go to TD Ameritrade desktop app, right, you can actually put in the ticker symbol and you go to the documents there, research documents, and there is a CFRA independent research body, which does free research for public companies, unbiased research. So although I don't take their assumptions, what I try to do is what method are they using? Because sometimes it's very difficult to find method of valuation for unprofitable companies. And for such companies, they use EV to revenue. And then I try to apply my own acumen with comparison companies, and then I give a multiple. And lastly, there's a bear case, which the price is around 71 because I'm assuming that competition will start to cause problems and Microsoft will start to eat its share and they're going to struggle to maintain the growth rate. And of course, if you have a low growth, I'm giving a lower multiple and then the fair price is 71. Okay. And lastly, what are the risks? Profitability is a big risk, macro risk. If the interest rates are going to go higher and higher, the non-profitable companies with poor cash flows are going to struggle with their valuations because in a discounted cash flow model, the Fed funds rate has a variable. So the more the funds rate increase, the valuation drops. The value of the asset today reduces. That's how economics works. And that's the risk. Now, shares dilution is also a big risk because I said there's a lot of stock-based compensation. Competition is a risk. It's a valid risk, and I'm going to keep a lookout on this. And let's say, just in case if the stock crashes, it's going to demotivate employees. And I'll tell you, price drops with the wild correction like we've seen for like C Limited or some other stocks, it is going to affect the employee morale, and there will be near-term performance issues as well. Now, market is going to punish anything less than 40% growth. I can foresee this, that if in the next year, if they have anything less than 40%, their valuation is so high right now that market will punish it. And the question I have is 55% growth sustainable? I'm a little 50-50 on this. I think it is sustainable because the cybersecurity has a huge momentum. So it might just be sustainable, but it's a wait and watch for me. And sometimes when I'm not sure about the valuation, I also use technicals. So right now it's trading below the 200-day moving average. So that's the universal rule. If a stock is trading below the 200-day moving average, it means it's bearish. Only when a stock starts to pick up above 200-day moving average, it means it's starting to catch back its bull run. So the 200-day moving average is 265. Right now it's around 200. So it's way below its 200-day moving average. It's in a downtrend right now. So if you look at the chart, it went actually up during the pandemic, and right now it's sloping downwards. It hasn't found a base. It hasn't consolidated sideways. So it has to consolidate sideways for a while to have a fight between the bulls and the bears, and then settle down somewhere before it starts to go higher. Right now, it's still struggling to find a base, right? So I'm still not in there. But when I look at the charts, I can see it's a very, very strong support at 205. Like the stock really bounced strongly at 205. So I'll be watching these levels to see whether it really holds true. And yeah, that's basically my analysis. I hope I didn't take too long. I did actually 15 minutes. but yeah, let me see if you have any questions.
Yeah. Thanks a lot, Varun, for the detailed presentations. I think the way to do it using Twitter thread, right, and then just walk through, I think it's very, give a very clear direction on the stories from top to bottom. I think this is a new way of communications, not really using slides, but just using Twitter thread. Okay, thanks a lot. For those who are joining, right, if you want to ask questions, you can just unmute and ask. I think, and if you're shy, you can submit your questions over Slido. I'll be watching the Slido. If there's any question, I will just read it out. But before that, I just want to, I will start out with the first question. All these companies, they are rather new, right, in the market, compared to the companies that they are trying to disrupt, right? So I just want to get a sense, like, if we just look at their product, right, is there any sign or any customer feedback that tell us the product that they have, right, is really like in an order of magnitude better than competitors or also comparable alternative products in the markets? Do you have any insight on that?
Yeah, so I tried really hard, right? So I tried really hard to go on YouTube to see whether there's customer testimonies. I actually even went to some of the, there's sometimes the customers give their own testimony in their own website. So I tried a lot to see if there's a clear product advantage. And now I'll just share back my screen once again. Sorry. The advantage of using Twitter is because you can get feedback from people. So I had this issue, I had this challenge, and there's this guy called Eugene on Twitter, which I really respect. And he actually posted that if you look at Gartner's quadrant, Zscalar is actually a leader. Now, I don't know if I'm going to be able to find it immediately, but he actually posted a Gartner chart, and I can put it later in the chat when I find it. So Gartner has done an analysis for leading cybersecurity products, and it's a leader there. So I had this big question, that is the product really an advantage? And I was a little doubtful. Let's see. Yeah, I think it's here. Zscalar, I would add them in the undisputed top dog space. If you look at his profile, he's a great guy, right? Like the kind of summaries he makes, he has around 10K followers, and the kind of summary he makes for earnings reports and everything is actually quite great. So he actually had a thread on Zscalar, which I didn't realize until he posted it on my Twitter, that it's a market leader in security. So Zscalar sits somewhere here, but I'm with you. I am still struggling because I can't feel the product, right? It's not a phone, it's not a car. I can't feel it. So for me, I'm still a little, I need more proof points. So that's why the Forbes 2000 customers, like that is a proof point. Customer retention is a proof point. They are growing customers is a proof point. It's still a new product, so can't really say, but cybersecurity is, it's weird. Like you wouldn't know until you get hacked, right? But if you go to Zscalar's website, they'll actually show you how their model works, and maybe that gives a bit of faith. So for me, the trust is in the leadership. The trust is in what they're doing. I trust them, kind of thing. So I can't really say what the product, whether the product is far better or not. No way to say.
Yeah, this kind of business is what we call the B2B business, right? It's not so easy unless we are in the IT department of the company, then we can get some feel, right? And we are not in the industry, it will be harder. Actually, the other questions, which is also related to the product, is that, you know, when you go through the companies, right, it reminds me of the company called Snowflake. So that's also the companies that is like cloud native, right? So Zscalar is also cloud native. Actually, I'm just curious because for Snowflake, I can understand, right? Because, you know, before all these companies move their data to the cloud, right, they're all maintaining their data in on their on-premise servers, right? So the way to manage on-premises versus on the cloud, it will be totally different, right? So they build their solution, their product from the cloud. They call it cloud native, right? So they give us a lot of advantage. For example, like everything is just much more scalable and so on, right? Yeah. I'm just curious, can we apply the same on the cybersecurity as well? Because, you know, for companies, right, I don't think there are companies that operate like 100% on the cloud, right? They usually have their own, their own IT system, and then they might have some cloud, and then the mix of two, right? And I don't know how much advantage that Zscalar has by starting out like as a cloud native company. So do you have any insight on that?
They do both. So they have something called as zero trust exchange. So basically, imagine all your data, all your sources of information, your mobile or your company servers or whatever. What they say is everything will go through Zscalar Cloud. So generally, when you log into your company laptop, you'll have a VPN connection like a Cisco AnyConnect or whatever, right? Nothing happens. You immediately logging in through Zscalar Cloud, and it is a seamless user experience. Every traffic is routed through the cloud, through data, whether it's from AWS or whether you're using another app like a Snowflake or using your own data centers. They route it through this cloud. So it's a one-stop shop for cybersecurity. Cloud ERPs like a Salesforce.com for their CRM solutions. So it's a cloud software, like if you're using Adobe or whatever. If you want to make sure everything is secured, Zscalar is saying, I don't trust anything. They call it zero trust. Every network traffic will go through our cloud, which is Zscalar Zero Trust Exchange. And it's like from an end user point of view, it's a seamless experience. So I don't need to connect to VPN or anything. Am I still audible?
Yes, still following.
Yeah, but I know you're trying to figure out a product advantage, right? Frankly, I'm with you. I don't know that if there is a clear product advantage, because cybersecurity is such a niche industry. Maybe it's better just to own an ETF, the cybersecurity ETF, because I know that all companies are going to do well because everyone's going to invest more and more. But I think it is also, for me, it's about founder-led companies. I get fascinated with founder-led companies because I know that they execute much better. So that's why
you mentioned about Microsoft. I think this is a very interesting competitors, you know, because we, like I mentioned, right, we don't know that much on this. No, at least I don't know that much about cybersecurity. So I would just have to draw, let's say, comparison or parallels with any things that we have seen before now. I think one good example, you know, with Microsoft is that, you know, Slack, this software called Slack, right? They use it for internal company messaging, right? Yeah. I have friends using it, so they gave kind of like good review on this product. So it's a good product, right? You know, people just reduce the usage of email and just using this chat-based communication in the companies, right? And then here comes the Microsoft Teams. And I personally using Microsoft Teams now. Slack, I haven't used it, but my friends, they use it, right? So I just asked for like, okay, what do you think about the products, right? Comparing these two. And I think so far the review based on like a couple of samples is that, okay, they say Slack is still better than Microsoft Teams. But after a while, right, I just check again. They just say, okay, actually we just move on to Microsoft Teams just because of, I don't know, like all this bundling. There's this power of bundling that make companies so much easier to spend on Microsoft products, right? So that one become like a huge advantage.
Absolutely. And I see that, I see that's why I didn't even call out the other competitors, right? Because I actually don't care, because I think Zscalar has already eaten their lunch. It is proven. But I don't know if they can compete with Microsoft. That is, to me, a number one risk. So if Microsoft decides to tell clients that, hey, don't worry, I'll bundle everything for you, I think I'm going to trust Microsoft over Zscalar, right? Like you said, like you just switch to Teams, right? So yeah, I think Microsoft does have that power and brand.
Yeah, because this is not like, B2C, right? If B2C, then we can judge that, okay, if a product A is better than B, then people will just go to product A, right? It's so simple, right? But when it comes to like business customer, sometimes I don't know how the sales team is running things, right? They can just do like this kind of bundling things and just win the competition. I think it's not fair, but it's how it is now. So that's the things, right?
True. I think the Gartner research does help, right? Because Gartner has probably some methods that any B2B business, like even when I used to work in solution decision making, right? We need to prove that it is a winner in the Gartner quadrant, and we need to prove feature by feature. So I think if I can, I'll probably try to find something somewhere, which really compares Zscalar versus others feature by feature to prove that Zscalar is probably better. Because I'm sure that is how Gartner would rate it as well, right? They would have some evaluation method. But maybe it's a paid service or whatever. Not sure.
Sure. Actually, another related question on competition is that you mentioned that they are killing the, they are disrupting some older companies, right? What are those companies? Who are the old players?
Palo Alto, Fortinet, Checkpoint. Now, this, again, I'm not an expert in this industry, but I know that these companies were specialized in data center securities through VPN and firewall. Now that things have moved to cloud, they are also building products, but Zscalar came with a simpler and faster product, and they blitzed the market. So if you see the growth rate of Zscalar versus growth rate of other companies, Zscalar is growing much, much faster.
I see. But these companies also not that old, right? It's not like, let's say if I'm comparing Zoom versus, like WebEx, right? I'm the user of WebEx. It's so clear that WebEx is just not as good as Zoom, right? But when it comes to, let's say I just look at the share price, right? It's not like they are diverting. I think they are all still moving around, like they're tracking each other in terms of the share price, right? So I believe, at least from investor perspective, is that it's not a clear win that Zscalar is eating their lunch, right? Or is it really their winnings? Because I haven't paid too much attention.
So I say that because of two reasons. One is the greater than 500 customers in Forbes 2000. I think that is a great statistic because they didn't have that stat before. So if a customer in Forbes 2000, which should be a large company, is making their IT decisions and they are choosing Zscalar, a relatively newer player, over a established player like Palo Alto, Cisco since 2005 or since 1990s, then that just tells me that probably they have something better to offer, right? And again, this is customer testimony, right? Because they are paying their money to Zscalar. So that's my logic behind eating the share, because by right, if 1/4 of your Forbes 2000 customers, greater than 1/4 of your Forbes 2000 customers is Zscalar, it means they're doing something better than the others. Also, if you look at Zscalar's revenue growth versus some other cybersecurity firms' revenue growth, you'll find Zscalar as much higher. You would have heard of CrowdStrike, but CrowdStrike does something completely different called endpoint protection. They only secure your mobile phones like Microsoft Intune, right? So CrowdStrike is something similar to that. So Zscalar and CrowdStrike are not exactly direct competitors. There is a Twitter person who's actually done a deep dive on cybersecurity as an entire industry where different players do different things. If you want, I can link that thread. The guy is called Francis Analyst on Twitter. He has a pinned tweet for cybersecurity as an industry, and he actually shows that what kind of different companies play in cybersecurity. So I do feel that most of these companies will win, because cybersecurity, just like electric vehicles, is going to be the big problem which people are going to try to solve in the near future.
Yeah, for sure. I think, once a while there's like a high profile hack cases or anything, any cases that is cybersecurity related, right? It will just become like a advertisement for all the cybersecurities, right? I think companies cannot just say, okay, I don't think this is important and let's save some costs, right? I think they at least they will have some pressure to spend the necessary money just to make sure that they are like well protected, right? Because
absolutely.
Yeah. I think this guy Francis Analyst, I have read a couple of his tweets. I think really good stuff. I think he also invested quite a number. His investment is mostly on these high growth companies, right? I think this is quite good.
So I'll post the link. I think, obviously I didn't understand everything here because some things are beyond your level, but at least it gives a bit of an idea and some of the due diligence he's done.
Yep. Okay, I'm looking at the list of our friends here. Anyone has any questions to ask?
Song here. Yep. Is there any reason why you pick 3 to 5% of share dilution across all three cases, all three bull, ultra bull, or bear case? Is there a reason why you pick 3 to 5%?
Yes, I'll show you. I'll open up my valuation model. So okay, so if you see my shares outstanding column here, basically they gave a bit of a guide for their shares outstanding, and basically I realized that by the end of 2022 versus 2021, their guidance, even just for the first quarter, so I didn't even increase the third quarter, I didn't even increase the dilution for the fourth quarter. I assume that they're not going to dilute anything more in the fourth quarter. Their shares outstanding is 142 versus 135 in 2021. Okay. And if I do the math, it's around 5%. So it's already 5% right now. And it's a hyper growth company where they will have employees selling shares and they'll have new staff onboarding, and all this is going to continue to happen. So 3 to 5 actually probably is an under statement. So I've actually taken 3% in my bull case because I believe they will have to continue to dilute to keep employees excited with stock-based compensation. I think in my bear case, if I'm not wrong, I think I've kept 3 consistent. I think probably I should have done more, but I've just given them the credit that they might improve their discipline with shares dilution. But it's based on management guidance. It's based on management guidance. So I look at their earnings outlook and they've given a guidance, and I just use that to make some educated guesses on how their pattern will go, because they had 3% in 2020 and I gave them the credit of the same rate of 2020 and I put it ahead.
Okay, thank you very much.
No worries.
Anyone else have any question?
Varun, this is Cloud Investing here, Terence here.
Hey.
I have some questions I have some comments firstly. Firstly, I think the cybersecurity pie is getting bigger. So technically, if you look at all the competitors and the old one or the new one, right? Their last year's revenue has increased tremendously.
Yeah.
I mean, so the old people in the old company in the industry will still continue to make profit. The new one will still continue to burn cash. So that is the trend. It is. And if you talk about Zscalar in itself, right? From what I hear from you and from what I understand about Zscalar, right, they are quite in a niche market in that sense. I mean, if you say that CrowdStrike cannot, it's a different product, right? But eventually, can it have the same product? I mean, there is a possibility if they want to grow bigger, they have to do that eventually.
Yeah.
So somebody will eventually win within this cybersecurity space, right? A giant will come out eventually, and consolidation and stuff like that. So so in that sense, if you talk about product wise, and Zscalar only got this product that they are the best in right now in such a big space, right? Then how much are they innovating? Like how much money are they putting into their innovation, their R&D? I think these are points that you can look at as well, comparing with the other. Centel one is, for example, is another cybersecurity startup that is is burning cash, but it's something that is built by Wall Street that is like always the next big thing kind of thing. CrowdStrike is one that has been ongoing like for the last 2 years, that people are just cybersecurity equals CrowdStrike, right? Although nobody knows what they do, right? And I think you made a point in your presentation that states that nobody cares actually what the cybersecurity. I mean, until you get hacked, then people know, okay, yeah.
Exactly.
So, but then that goes to a point of who are your target customers, right? If I'm going to a big company, let's just say Nike, right? Nike is going to hire me. They are not going to hire any Tom, Dick, and Harry. They'll probably get some. I mean, if you look at a platform basis, they'll get somebody in. You need to have some consultant basis, and then give them some big hoo-ha and say, oh, we are going to do this. I think this is not good enough, and go and make a show in their business and say that you guys are not good enough. We can help you to be better, right? That's how they do their sales, right? But if they are targeting the Tom, Dick, and Harry SMEs, right, it will become like they will have to go on this stream of like SaaS services, right? This licensing SaaS whatever that is recurring income and stuff like that. And so you must look at the number of customers. It's a very similar comparison that I've seen recently. Somebody compares Snowflake against Palantir, whether they are the same or not. I mean, we don't have to care whether they are products. But the way he compares is, at the end of the day, Snowflake has a lot of small customers, right? And Palantir is going after the big customers. So, and when you go after big customer, the TAM is small. But all your big customers must come in with huge revenue, huge contracts. And when you go after small customers, your TAM is big, but it doesn't matter. You just whack every single Tom, Dick, and Harry out there. So that's the strategy that I think you must understand what the company is going for, right? And if I mean, you want to look at another comparison last time was Fastly versus Cloudflare. Yeah. So Cloudflare is going after Tom, Dick, and Harry internet. Fastly is like, okay, I'm going after enterprise. But eventually you look at the share price. When a company goes after enterprise, you look at Palantir, you look at Fastly, right? The share price is always volatile because they go
B2B is hard. Yeah,
B2B is hard. So they got to go after big contracts. And when you go after big contracts, right, it's not like every year you have that big contracts. So how they convert every single deal into a permanent recurring contract is something that I think is important. But when you go after Tom, Dick, and Harry, right, for example, if I'm a small business owner and I have a security whatever from whatever, right, whichever company it is, right, I mean, I will just keep, if it's $5 per month, I will just keep paying, right? I don't care, right? I just don't get hacked, right? And even if I get hacked, I may not know, right? So until the point of things getting leaked. So I think in that cybersecurity space, you should look at this in the product space, because we cannot determine whether the product is good. And to be honest, Garnier and Forrester, I don't believe they are. Technically, I'll try not to believe them, because at the end of the day, they are all paid to do the report. So,
and that's true, right?
So that's for me.
No, absolutely, and I think that's very valid. And I think the theme of the question, which I think even I have and which everybody has, is actually how do you know whether their product is better than the others, right? And I think I have that question also. But I think when in my mind, if I'm dicey about if there is a product moat or not, I want to see the execution of how they're doing. So in one of the interviews I read about Jay Chaudhary, he was like that. He actually said that you can have the best product in the world, but if you don't have the best teams to sell it, you are going to struggle. So that is why why he invests heavily in sales and marketing to get the best talent on board, which have the ability to sell the products. So some of my friends are young 30, invest in Zscalar at these levels because I think the risk is high. There is a big risk because it's superly premium valued at the moment. So I will wait for a steep correction and hope that they continue their momentum and growth, and I'll be monitoring their customer growth, because if the customers are growing and the Forbes 2000 customers are growing, that's the only testament I need. I need the market to say Zscalar is good, not Gartner, but maybe the market is saying their IT teams are doing some research and some due diligence before picking Zscalar over Palo Alto or CrowdStrike or whatever, right? So I will have to trust them versus trusting anybody else. So that's my strategy for Zscalar. At these levels, I'm not excited. I'm excited somewhere around the 150s and 140s if it ever goes. But other than that, I'll have to pass it. But I don't hold any position in Zscalar at the moment.
Okay. Thanks a lot. Actually, I just have one question from Slido. Let me just read it out, and then after that, maybe I have one or two more questions that may not be related to Zscalar. But let's say if you guys have any questions, just stop me. But for now, let me just read out these questions. Recently, Mandiant was acquired by Google. Rumor that Microsoft was in the contention. Do you think Zscalar could get acquired too? Okay, this Mandiant, I also don't know. I saw the news. I actually don't know this company. Never heard before. Yeah, have you heard of this news?
I did read it somewhere, but I'm not sure what it was. Sorry, I might not be the best person to answer this. I have very little knowledge, but as much as I know I've listened to 1 hour interviews of Jay Chaudhary. I don't think he's a guy who's going to sell his company. It just makes me feel that I think he will try to eat every other company, but he just makes me feel like he's the kind of entrepreneur who wants his own thing. He makes me feel that, he gives me that vibe.
Nice.
That's just my 2 cents. I just don't know much about whether somebody offers him too much money and then he's like, okay, fine, bye bye.
Okay.
Yeah, sorry, I don't have an answer for that.
It's okay. I think really, I think all these charismatic founder CEO, they really know how to build the confidence, right? I think that's good. Yeah. Any other questions on Zscalar? Just looking at the group.
I actually want to say these kind of questions are very helpful for me as well, right? Because I did it from a one direction point of view, and especially the couple of the product centric questions you guys ask and the R&D thing. I think that also triggers a lot of thought in my mind. So thanks guys. It helps me. It's a two-way thing.
Yeah. Actually, the reason I reached out to you to have this discussion was because, during the weekend voice chat, there's always one person, I don't know, he posted the question as anonymous, but he asked about cybersecurity. So I don't have much, insight in this area. I was looking for someone that can share something on this area, but good that you know about Zscalar that can share with us. Okay. Let me just, just now when you just started, then we straight away go to the Twitter thread and go through the main topics, right? But I just want to take one step back and just want to ask, can you just roughly introduce yourself a bit, because you are new to the group, and then I think you also haven't that active. Just introduce a bit, for example, like your profession and give us some background. That will be helpful.
Sure.
Thanks.
Sure. I intentionally just started with the topic because I thought you guys will get bored listening to my life story, but I'll spend 30 seconds on myself. So I've been in Singapore for 13 years, originally from India, PR here. I work in Accenture Tech Consulting, 32 years old, married, no children. I started investing actually just 2 years ago, and I was very happy doing no research, looking at YouTube videos, and my portfolio was 47% up, and I was like, wow, I'm a genius. I picked the best stocks in the world, but I realized I'm not a genius because when the market corrects, it humbled me. I realized that without research, I put my hard-earned money, 50% of my net worth, into stocks, and thankfully I'm just 13% down, so it's not that bad because some of the companies I picked are a little bit stable in nature. But it made me realize that you can borrow stock picks, but you cannot borrow conviction. It's only your own research which is going to protect you in difficult times. And I'm thankful for this bear market. I'm thankful for this correction that it actually came very early in my investing years, because I took it upon myself, and now I have a process of researching about companies. It used to take me 2 weeks to study one company. I have optimized it to actually take 1 to 2 days. Like, for example, Unity, Upstart, I did it in 1 day. I have a checklist of questions and I have a method. NVIDIA took me 2 days, but it's now come down to 1 or 2 days, and I'm starting to use Twitter as my journal to just spread my whatever insight, and then even get feedback from the market. So, the community has been helpful, and that's why I do it. I just somehow enjoy it also, and it just makes me better. So yeah, that's who I am. Varun is the name, by the way, just in case if you're wondering. Yep, but thanks, Boon. You've invited me here. It's really grateful.
I can totally relate, sir, about the conviction part. Usually, when the share price has been going up, it's always easy to, just park $2,000 here, $3,000 there, right? And just watching it goes up, right? We don't have to do that much of detailed research. Maybe some high level understanding that's okay. But usually it's when the share price just dropped by 30%, 40%, and then we are asking ourselves, do we want to like double down, right? Okay. That one is really like, testing our convictions.
Exactly.
Yeah. I also have a couple of names that, some of the names I tell myself that, I'll just have skin in the game so that I will have more incentive to do the research on. For example, names like Snowflake, Twilio. I also have these high growth names. So also similar story. Twilio, since I bought until now, I think compared to average price, I was down like 65%. So still not much conviction to double down. So I can relate to that. Yeah,
I actually feel like that as well.
Yeah, just curious, right? You want to share like let's say, because I saw there's quite a list of companies that you covered on Twitter. For example, like AMD, you have a couple more, right? Let's say like Unity and Palantir, right? Are those your like current top picks, like your current top positions? You want to share a little bit on, maybe no need to share the full details, just like top 2 or 3. I think that will help.
So I'll just give a quick list of what I own. My top holding is Tesla. Second top holding is Google. Third is NVIDIA, Facebook, and Microsoft joint. Then I have C Limited, also same level, same amount allocated as NVIDIA, Microsoft, and Google. Unfortunately, C Limited and Facebook are hurting me. But then I have Coinbase, I have AMD, I have SPY ETF, I have QQQ ETF, I have Upstart, small position in Upstart, very small. Unity also very small position. Apple, small position. Palantir, small position. Shopify, small position. UiPath, very tiny position. And that's about it. So I from the big tech, I just don't have Amazon, because I just feel I don't have Amazon and Netflix, and I don't intend to until I do my deep dive properly. I did deep dives on Airbnb and Zscalar, but I don't own them, but it's in my watch list. I really want to own them because I think they're pretty exciting leadership-led, founder-led companies. So yeah, that's what my list is.
I think I would say it's 80% overlap with my portfolio. Maybe on the allocations might be different, but in terms of the list, right, it's quite similar. And just for your information, I think the names that you just mentioned, right, those companies, right, I think I would say most of them, right, that they are common investor in the group. So I can't recall all of them, but for those who are shared, at least we will have because we discussed those names before. To me, it's very, very familiar with those names. Only the names, not so much on the detailed business. There's a limited capacity to on the research, right? Yeah, I'll just see like anyone else. You guys have any questions they want to ask Varun or not?
Hi, Varun, Kelvin here.
Hey, Kelvin.
Hi. I'm sorry because if I missed this because I didn't come in early part of your talk. But do you have any information on what percentage of revenue do companies typically spend on cybersecurity?
Good question. I don't, and I think I should find that out. But no, I don't. Probably there is somewhere to know this.
also not so easy, right? Because I believe these are
correct. It's a budget, right? It's a company budget thing. But I read somewhere in Statista or some other poll where there was some kind of a CAGR growth prediction for cybersecurity, and cybersecurity is one of the industry which is going to grow faster than the likes of e-commerce and up to that, similar to EV type growth. So it's predicted that cybersecurity will grow much faster than most other industries. But I think it's a little hard to find that budget number, I feel. Like how much the companies are willing to spend on a volume value basis. So what I do typically is I go to Statista, or I would go cybersecurity CAGR. I'll just Google something like that and I get some kind of a link of the total addressable market. So all I want to know is the percentage growth. Or is it a growing market or a declining market? So obviously cybersecurity is a growing market.
Okay, thank you.
Anyone else has any questions? Okay, no. Varun, do you have any questions for me, for anyone else that you want to?
It's absolutely great. Sorry, I'm not that active because of the work days and all, but whenever I get a chance, I at least read some of the pinned messages you've put, Boon, and I really like one AMD article you shared. I'm actually doing my AMD deep dive right now, so that helped me think a little bit harder on what I'm doing. So happy to be a part of the group. Do just drop me a chat if there is anything you are curious. I'm happy to just learn and share my thoughts as well.
Yep. Thanks a lot. I think for all of us here, if you haven't followed Varun on his Twitter, then I think you have the links, right? I've shared in the group. I think really a lot of good resources there and a lot of good Twitter thread that can help us understand at least starting points in case you want to research those companies. So I think thank you so much, Varun, for your the sharing and the discussion. I think we'll just end the call here unless there's any questions from the floor.
Can I ask a question?
Sure.
Go.
Yeah. What type of cybersecurity ETF that you're holding right now, or you are watching?
I am not tracking an ETF because I stopped investing in ETFs. That's why I'm only looking at Zscalar at the moment. But I think there are some which actually is holding a full basket. I can find that out for you. But the reason why I stopped investing in ETF is because when it goes down, you don't know whether you want to average down or not, right? Because sometimes it goes down because of one or two companies. So I used to hold ARK ETFs very early in my investment career. And I realized that, this is good when it goes up, but it's very bad when it goes down. So I switched my approach to picking individual companies, or if I'm picking an ETF, I pick the entire market. So I have an S&P 500 ETF, which is a similar allocation like the Microsofts and the Googles I hold. So I do have that kind of stability. And I also hold NASDAQ ETF. So I'll hold the whole market, but I won't hold industry-specific ETF because it's good when it's good, but it's really bad when it's bad. So, it's a bit risky for me.
Understood. Thanks.
Yeah, I think I shared a similar view as well. There's this ETF called the WCLD, World Cloud ETF, something like that. Quite interesting because I just want to invest in cloud companies. I just look it out, right? I think that's one of the most common and famous one. And then the moment I do the research in those names, right, I found why there's companies that is not really like full cloud, right? Like cloud native company. They are just companies that have some exposure in there. So, that there's companies that you like and you don't like. That's why, like you said, not very hard to average down or average up as needed. Okay. Close to 1 hour. Thank you so much, Varun, for the session. And let's say if there's any future session, any new companies to talk about, then we can have another session. Yeah.
Absolutely. Happy to. Cheers.
Okay. Thank you so much.
Thank you. Bye-bye.
Thanks all. Bye-bye.